Hello there. Welcome to Introductory Financial Accounting Info. Today we want to look at the question paper of November 2022. So on that question paper, we are going to look at question 2, where we have the preparation of the cash book, and then we are also required to prepare the bank reconciliation statement. So if we go to our question, you'll see that the question that we have. So this is the question that we have on question 2. And the question reads, the information below appeared in the books of Jacob's Electronic Kitchen Appliances for the month of July 2019. Then we are given the first point, make the supplementary entries in the cash book on 31 July 2019. Close off and balance the cash book on 31 July 2019. Then on the second point, prepare the bank reconciliation statement on 31 July 2019. So these are the requirements according to this question. Then we are given the information that we are given there. So you see that this is what we have. So we can go down the question and see what we have. Just as we go down the question, we are given the information that is there. So if you go down the question, we have information that we have there. Then up to 2 points, up to 2.8. So this is what we have. So we are going to go information by information and try to see what do we have, of what is affecting the journals, what is affecting the bank reconciliation. So this is at the end of our page. Then we can go and check on the next page what we have. See if anything yes up. We have something there in terms of the information that we have. So our information is going down to 2.13. So this is what we have. So we can go item by item and try to pick which one is being affected in terms of the cash book and bank reconciliation. But basically, we are also supposed to know in terms of how do we enter in the bank statement and the bank account in our ledger. So the bank account in our ledger is the one that is being summarized in the cash book. Remember, the cash book is a summary of the cash account and the bank account. So basically, the cash book is representing the ledger that we have in our books. But we also have to know that whenever we receive money as a business through bank, the money is, we should see that money on the debit side of the bank account, that is the cash book in our ledger. But on the bank statement, it will be on the opposite side, that is the credit side. And the opposite is true. What is on the credit side of the bank account or the cash book in our ledger is going to be on the debit side of our bank statement. So let's not try to confuse there. So if you go at the beginning of the question, then we are given that information 1 reads cash book at a credit balance of 106,355 rands. But you see that we are told that we have to open the cash book. So we are going to open the debit side of the cash book and the credit side of the cash book. But on the opening balance, we are told that it's on the credit balance. So we go to the credit side and put our opening balance is 106,355. So that's where we are going and try to put that figure. So this is our credit side of the cash book. So you see that on the document column, we are going to show it as the balance sheet. That's where we are getting the information. So we can say BS. Then on the day, according to the information that we are given there, remember this is being prepared at the end of the period. So the closing date that we have there is state 1, and then that is the closing date that we have there, and then we check now in terms of our balance. We have our balance BD, that is our opening balance on the credit side. We are going on pay here. We are just going to write balance. And remember this is our balance BD, so here is BD. So on the amount we've got 106,355 355 there. So on the date, remember this is the opening balance. We can check this date. The date that is being represented as the opening there should be 1. So it means here we have 1 as our date there at the beginning. So that's what we have there. Then in terms of we have got other columns that are there. So what is important is that what we have entered there here You should check if it's affecting purchases, trade receivables, drawings. If it's not affecting this, it means that it automatically goes to the sundry accounts section there. So it means that 106,355 is going to come on the sundry account section. So on amount, we have got 106 here, 106,355. So this is what we have there. Here it's 106. So we are going to say here 106, 106,355. So that's what we have there. So the second item that we have there is here on item 2. It is a comparison of the bank statement with the cash book on 31 July 2019, revealed the following differences. We are on 2.1. We have the bank statement from Blue Bank showed a credit balance of 285,697. So this is the credit balance that we have in the bank statement, and what it means is this balance is a favorable balance. It's on the credit side. Remember, what is on the credit side of the bank statement is also what is on the debit side of the cash book. So this is a favorable balance on the credit side. So we are going to start with this balance in the bank reconciliation statement. It's not going to affect our cash book. We can leave it. Then we go to the next one, 2.2. On 2.2, it reads the following checks were not yet been presented for payment on 31 July 2019. So we have got these checks we are given here. We have got these checks that we are given here. We have got 3 of them, number 63 and number 70 and number 96. So what it means is these checks were not yet presented for payment on 31 July 2019. It means that this is going to affect the bank reconciliation. It's going to affect the bank reconciliation. So we're not concerned about this adjustment in the cash book. So here we can say this is bank reconciliation, and also this balance that we are given here is supposed to go to the bank reconciliation. So we can leave it at the point and you post it in the bank reconciliation statement. So we go to the next item, which is 2.3, and on 2.3, it reads here. The check number 56 to the value of 62,260 was sent on 1 December 2018 to AA Appliances as payment of our account. The check was delayed in the post and must be cancelled. A new one will be sent to them. So what does it mean? It means this amount of 62,260, the check didn't reach the bank. It was delayed along the way, and it was not processed at the bank. So it means it's not going to affect the bank reconciliation. But when it was posted, it was already recorded in our cash book. Remember, whenever we issue a check, we record it in our cash book. So when it is returned, we need to cancel it. So this was a check for a payment, so it was recorded on the credit side of the cash book. So to remove it, we go to the opposite side, which is the debit side, and enter the 62,260. So this is what we have. So on the debit side, we are going to put that amount of 62,260. So this is all the details. We have the description that we are given there that we are going to put all the details is AA Appliances Limited. So this is what we have. And then we are just going to, you can take note of the date. The date obviously is 31. That is at the end of the period. So we can go there and enter that one in the on the credit side of the cash book. So this is our credit side. Remember, this is our credit side. So we are going to enter it there. That is our on our document. We are just going to present it as a PS, and then sorry, this is the credit side. This entry should be on the debit side. Sorry, it should be on the debit side. Remember, we are saying it was a check that was for payment, and then we are canceling if we are going to the opposite side. So we are going to the debit side. So we can go there and go to the debit side. This is our debit side. So debit side is highlighted here as our debit side. So we are coming here and we are writing our document on document. Remember, we are putting our PS. Then the day we are saying 31. Then on the details part, we are saying it's AA appliances, AA appliances. This is a check cancelled. You can just maybe in brackets indicate that it's a check that is cancelled. And then on the amount, remember, it's 62,000, 62,260. We're going to put on bank 62,260, 62,260. So that is what we have there. So you see that this amount of 62,260 is not affecting our sales or trade receivables. So in that case, we put it under sundry. And the figure that we have there is 62,260. Remember, this was a person that was a business that was owing us money. So it means this was a creditor or a trade payable and not a trade receivable. So it doesn't fit here. So we are going to put it in the sundry account section. Then on the description there, on details, we are going to indicate that it's a trade payable. It's a trade payable. So we come here, we specifically indicate that it's a trade payable. So this is what we have. Then we can go and check what we have next there. So on the next item is 2.4, and it reads a check to the value of 285,345 rands was completely debited to Jacob Electronic Kitchen Appliance Bank Statement. So was wrongly debited to Jacob's Electronic Kitchen Appliance Bank Statement. So it means this was a wrong entry that was made here, wrongly debited. So what does it mean? It means we have to cancel it because it doesn't belong to this bank statement. So by correcting it, we are going to the credit side of the bank statement and correct it. So this one is not affecting our cash book, but we are going to adjust it in the bank reconciliation. So this is what we have. Then on the next one, the Barclays Bank had debited the current account of Jacob's Electronic Kitchen. So these are the items that we are given: appliance bank statement, appliances bank statement with the following amount. So this we have got cash deposit fees, credit card fees, service fees, tax levies, interest on debit balance. So these items are on the bank statement, but they are not there in our cash book. So it means we have to enter them in our cash book. And if you look at them, they are all payments. So it means they are going to the credit side of the cash book, because all payments go to the credit side. And whenever we receive money, we put on the debit side of the cash book. So this is what we have. But if you look at the description of these items, you see that from here to here, they all represent bank charges. Here we've got bank charges. So what it means is we are going to add them 742, 742 here, we add to 658, we add 524, we add 2,627 here. If you add here we've got 2,627. So if you add there, the total that you are supposed to get there is 5,551, 5,551. So this is the figure that we have for bank charges, and we are left with 4,750, which is interest on debit balance. Interest on debit balance. So a debit balance usually on the bank statement represents a bank overdraft. That is, we have got more withdrawals than the money that is there, the balance that is there in the account. So then we are left with an overdraft. So an interest can be charged on that balance. So an overdraft also can come as a short-term loan. It can come as a short-term loan. So it's subject to interest. So this is the interest that we are given here. So you see that this is interest on overdraft. So basically here, the description is interest on overdraft. So we are all going to put them in the credit side of the case book, since they are not reflecting in the case book. So we can go there on the case book and go to the credit side and enter those. So this is our credit side. So on the description, remember we are putting VS, and this is we are putting Z1 now on this one because now at the end. And then remember, this is a payment to Barclays Bank. So here the payee is the business, be it whoever we are paying the money. So we have got Barclays here. That's the bank that we are paying, Barclays. And then this is Barclays Bank. And then the amount that we have is 5,551. So we've got 5,551. So this is what we have. And you'll see that these payments in terms of bank charges does not fit in purchases, sales, receivables, and drawings. So if it does not fit in this three column, we can put it there under sundry account. Then the amount we have got 5,551. And then we can now, on the details part, we are now describing this payment. Remember, we are saying it's interest on overdraft. So here we are just going to write that we have interest on overdraft. So this is what we have. Then, sorry, this is not interest on overdraft, but we are saying is these are bank charges. Interest on overdraft is other parts that we have there at the bottom. This one is bank charges. This one we have got bank charges that are there. Then we can go there and see what we have next. We also have bank interest on overdraft that we have there. Remember, the last item was interest on overdraft. We can just go there and check the actual figure that we have. Interest on debt balance. This is the interest on overdraft, 4,750. So we are going to put it again. This one. So what we are saying now, we are saying here. We are also saying BS, and then here is also a payment to Barclays Bank, and the amount is 4,750. And then this same amount is going to come on sundry. Then on description now we are saying interest on overdraft. So here now we are saying interest on overdraft. So this is what we get. Then we can go and check now the next item that we have in the question. So from interest on overdraft, the next item is on 2.6. And they are saying that 2.6 reads a deposit of 61,285 was wrongly credited to Jacob's Electronic Kitchen Appliance bank statement. So this is an error that is affecting the bank statement. Not, whenever an error is in the bank statement, it's not going to affect the cash book because already this deposit was recorded and it was not supposed to be recorded there. It was a deposit maybe of another business. So we need to correct it in the bank reconciliation. So we'll see it when we are now in the bank reconciliation. So this one is also bank reconciliation. Then we go to the next one. The bank statement showed a debit order of 2,984 in favor of Telkom as payment of the business monthly bill. So Telkom, you know that this is a mobile network. So this is a telephone bill that was deducted from a bank statement. A debit order, it means the bank statement was debited. This description means it's a debit on the bank statement. And whenever it's a debit on the bank statement, it represents that money has been deducted from our account. Actually, it's a deduction of our balance debited on the bank statement. So usually a debit order does at the end of the period will not be reflecting in our cash book. So we need to enter it when we are now doing the reconciliation. So we are now going to the credit side and put this 62,984, and it's for Telkom. Very important to take note as we enter it there, so we can go to our credit side. We can go to our debit side of the cash book. Our debit side of we are saying it's a payment of a telephone bill, so it's supposed to be on the credit side. Remember, payments, we said they should be on the credit side of the cash book. So here, on the first part here, we are saying we're just putting our BS, and then the pay, we are paying Telkom. And then the amount that we have there is 62,984. And if you come here, you would see that we do not have anywhere that this telephone book and the picture details of purchases, trade receivables, and drawings. So in that case, it's going to come under sundry account, and then we put our 62,984. So on the description now and details, we are saying it's a telephone. It's a telephone bill that we are paying. So we can just say telephone. So this is what we have. Then we can as well go and check what we have next. Yeah. Right. From this telephone bill that we have 2.8, a deposit of 128,578, which was made on 30 July 2019, was not credited to the bank statement of Jacob's Electronic Kitchen Appliance. So uh, this deposit is already there in the case book. Remember, whenever we issue a deposit, we record it there and there, and then we are being told that it's not yet recorded in the bank statement, so we are going to correct it on the bank statement. So this one will affect the bank statement. So here we are saying bank reconciliation. Sorry, this is bank reconciliation. It's affecting the bank reconciliation. Here, so it means this one is affecting our bank reconciliation. Then we can now um, go to the next one and see what we have in terms of 2.9. On 2.9, the bank statement showed a monthly stop order of 17,340 in favor of Tim Bakery. This was in payment of the owner's account. So whenever we have a stop order, it means our bank statement is going to be debited, and it should also be credited in the cash book. But usually, this stop order is processed at the bank first, so it won't be there in our cash book. So when you are doing the bank reconciliation, we are now updating our cash book. You need to end at this 17,340, since the assumption is that whenever there's a stop order, it's not yet in the cash book. So we are going to post this one there. It's on the debit side of the bank statement, so it should be on the credit side of our cash book. So we are going to the credit side. So this was a stop order in favor of Tim Baker. So we can go to the credit side. So this is our credit side. So here we are saying BS, and then on the payee, remember we are paying, and the amount that we have is 17,314. And on drawings, this is 17,314, and also we've got a section for drawings there. So we can just go back there and try to see if it fits in one of those columns. This was a payment of the owner's account. You see, this one was a payment of the owner's account. So whenever money is taken or payments are made for own personal use, for personal payments by the owner, we call them drawings. So this is giving us a hint that they are drawings. So we've got a column for drawings there. So we are going to put it under the column for drawings, 17,314. So it's coming on drawings. So when we have put it under one of these three columns, it means there's no need for us to post it under sundry accounts. We've completed the entries there. So we can go to the next one and see what we have. The next one reads vendor link deposited 123,641 directly into the current account of Jacob's Electronic Kitchen Appliances in payment of their account. So we've got a deposit that is there of 123,641, but it was deposited directly. So it means it didn't pass through the business. So it's not there in our cash book. So we need to record it on the debit side of the cash book. So we are going to the debit side and enter it as 123,641. But you see that this is a deposit from Ventolin. So we have Ventolin here, and it's going to be, let's see, Ventolin there. You see that Ventolin is our data. It is current account of Jacob's electronic kitchen appliance and payment of A account. So this person was paying A account. So this indicates that this person is a debtor or a trade receivable. So we have a column there for trade receivable. So we're going to put it under the column for trade receivable. So that is what we have there. So what does it mean? It means this is our debit side. So here we are saying BS, and then we are going there. We are saying it's a deposit from Vendolin. And then on the amount, we have got 123,641. And remember, we are saying we have got a column that we have there for trade receivables. Remember, the person is paying for a account. So I column for trade receivables, 123,641. So this is what we have in terms of this entry. So you can go and check the next one. Right. On the next one, we have got 2.11, a check of 75,678 rands received from a debtor, Julius Key, was dishonored by the bank due to insufficient funds. So what does it mean? As we indicated earlier, that whenever a check is issued, it is recorded there and there in the cash book. So whenever it's drawn, the cash, the check, we record it in the cash book. So it means it's already there in the cash book, but in the bank statement, it will be recorded after being processed. But this one was dishonored. It means it wasn't recorded in the bank reconciliation. So there is no mistake there in the bank reconciliation. So the mistake is going to be in the cash book. So we need to remove this check here. So this was a check received. So when we receive a check, we enter on the debit side of the cash book. So to remove it, we are going to the credit side, which is the payment side, and then enter it there so that we remove it. So this is what we have, and the amount is 75,678. So we are going to the credit side. So this is our credit side there, and we are saying there we have our BSE, and then for pay, we are saying it's Julius K. Julius K. And remember, this check is referred to draw, and just indicate there in brackets. And then at the amount that we have, 75,678, 75,678, 678. And then on this, remember, this is we are trying to, this is a check that was reversed, and we are going to reverse it. Remember, when we entered in the cash book, we also entered in the trade receivables as a payment that has been done. So we need to reinstate the amount owing of the trade receivable. So we also adjusted the trade receivable, and we've got a column that we have for trade receivable that is there. So we have 75,678. So this is what we have in terms of this entry. So we can go to the next one. So we are now on item 2.12. An EFT of 98,647 rands was made in the business current account. The bank statement revealed that it was the maturity of a fixed deposit at Barclays Bank. So what does it mean? We have an EFT of 98,747 rands, which was made in the business current account. And then the bank statement revealed that it was the maturity of a fixed deposit. So this is interest income. This is income that has been received there of 98,647. It's not interest as such, but it's income since it's coming in the form of fixed deposits. So what does it mean? It means we are going to enter this in the on the debit side of the cash book is money that has been received, that has been deposited into our account. So let's take off the amount, and then we are seeing that this money is coming from Barclays Bank in terms of the details, and we are going to put it there. So you see that in terms of this deposit, it's not going to affect those three columns of the other columns that we are having of sales and trade, the sales column and the other column that we are having there. So it means we are going to post it to the sundry accounts section. So we can go there, see what we have. in terms of these entries. So we are now here. We are showing that this are BS. And remember, it's in a deposit, so it's Barclays Bank. And then the amount we have got 98,747. And then on remember we're putting it under sundry, so we've got our sundry there 98,647. Then on the details part, let's try to see. First part, we know that this is a fixed deposit, so we are just going to describe it as a fixed deposit. So this is what we have in terms of this one. So you can go to the one and see what we have. So we are now on the, which is the last one, 2.13. A check number 97 was incorrectly entered in cash payment journal with 17,097 instead of 17,697. So what does it mean here? It means this was supposed to be on the credit side of the cash book, but it is entered wrongly there. The figure that was entered is this one instead of this one. So what does it mean? We entered a smaller figure. So we need to know to see the difference that is there, and then add the difference so that we reach 17,697. So to find the difference, we are now saying 17. Here we are now saying 17,697. Then we subtract 17,097. So this is what we have. And then the difference, we put it in the cash payment journal so that we have the correct figure there. So if we subtract there, we see that you are going to get 600. So the answer that you're going to get is 600. So you're going to put 600. And remember, this was a payment to ESCOM. On the details part, we have got ESCOM, and the payment is for, obviously, it's for electricity. So electricity, as we described it, understand the account. So let's go there and see what we have. It's on the payment section. Remember, the payment is just below there. This is the credit side representing the payments. So we are saying we have our BS there. Then here we are saying it's ESCOM. And then the amount that we have is 600. And we are going to put it again under the sundry account section. We got 600. And we are saying the description is electricity. Electricity. So this is what we have. So if you go back, we see that this was the last one. This was the last one that we have. So we can go there and maybe try to add to get the totals. We try to add to get the totals there. So maybe we are just putting our lines there. So if we add this one, the total that we are supposed to get here is 284,000. The total that we are supposed to get there, no, it's not that one. Remember, we are supposed to balance this account. So what we are going to do there, we are going to add this total that we are having on the payment section. The total that we are going to have on the payment section. The total. Right. Let's try to see if we add here on this section. So from 106,355 here, we add down to 600, we add the total. You are supposed to get 273,232. 200. The total that you are supposed to get there is 273,232. Then if you go to the debit side, you go to the debit side, you add the total there that you are supposed to get there. You see that 280, 284. Let's try to see what we get there on the debit side. Let's try to see what we have on the debit side. So if you add this, get the total of the debit side, you are supposed to get 284,368. 284,360. 284,368. So this one, remember this one we are saying, this one is the credit, and the debit we are getting 284,368. So this one is the debit total. So we need to find the balance there. So you see that the greater side is the debit side. So this is the side that is going to come between the double lines on both sides. So if you do this now, we are saying it's going to come in between the double lines there. So we can put our double lines there. We are saying here, put our double lines. And then the total that is going to come both sides, that is the bigger total, which is this one. So we are going to have 284, 368 there. And then this total also, that's where we're going to put it. Then the difference between the big and the smaller total will now come here. Remember, the credit is the smaller side. So where we have the smaller side, where we are going to have our balance CD. So the smaller side is on the credit side, so it's going to come here as our balance CD. The difference between the two totals. So here we put our balance CD. Our balance CD. So our balance CD, we are saying at this one, 284,368 minus 273,232. Then the difference that we are supposed to get there is 11,136. 11,136. So this is the difference that we are supposed to get there. 11,136. And then we can now try to complete on the other sections that we have there. So you see that in the biggest column, we don't have anything, so we're not going to put anything. But we have something there in the trade receivables column here, 75,678. So we're going to put it as a total there, 75. We have 75,678. Then here in that column, we also have one figure there, which is 17,340. So it's going to be our total. Then if you add the last column, you are supposed to get 191,376. So we finished this one, so we can now go to the debit side. We now go to the debit side. So debit side, we are just going to enter. Remember, we have calculated the balance, so we can just create our double lines there. So our double lines, we can put them here, starting from here. That's where we have our double lines going there, this side. So we are saying in the column here, the bigger total that we had there was 284. 284,368. So and we do not have our balance. We do not have balance CD, but the side that is called the bigger total, we have a balance BT just below the double line. That is here. So it means we have got our balance BT that we are supposed to put here. Our balance BT that we are supposed to put here. This is 11,000. The same balance that is our CD on the other side, 136. So this is what we have. Then we also have some columns that need some totals that we need to calculate there. We are now here. So the column that needs a total there is this one. We have 123,741. Then in this column, we have got 160. 727. So this is enough on the cash book. So it means this balance that we got here, 11,136, should be the same balance that we are going to get after preparing our bank reconciliation. So from here, we are going to the bank reconciliation, and the figure that we are going to go to get at the end, the balance that we are going to get at the end of the bank reconciliation should be similar or the same as 11,136. So we can go to our bank reconciliation. So you see that this is our bank reconciliation statement for Jacob's Electronics Kitchen Appliances. That is on 31 July 20, was on 31 July 2019. So we can start our bank reconciliation, but we know that in our bank reconciliation, we start with the figure for which is opening balance, opening balance. So we can go to the person to check what we have in terms of the opening balance, what we have in the question in terms of our opening balance. So if you go at the beginning of the question, we've got something about the opening balance there. Right. We are told that a comparison of the bank statement with the case for Federal July is the following. And then the bank statement from Blue Bank showed the credit balance of 285,697. So this is going to be our opening balance in the bank reconciliation. Remember, we already indicated. So this is the importance of indicating as we go through the transaction when we are updating the case book. Just indicate that this transaction is affecting bank reconciliation. So when you come back now preparing the bank reconciliation, you just pick them. So like this, we are picking this figure as our balance. So we go to our bank reconciliation. So on our bank reconciliation now, we are starting with the figure for our balance. So we are saying, remember this was a credit balance. So we are saying credit balance, credit balance is the bank statement, is the bank statement. It's coming to the credit, and the amount that we have there is 285,697. Then we can go back to the question to see what we have next. Then from there, we are seeing that the next item that is we have that is affecting the bank reconciliation is here. We've got these checks which were not yet presented for payment. So they are for payment. It means it's a deduction that is supposed to be there on the bank statement, but they are not yet processed there. So what we need to do, we need to go with this and put them on the debit side. Remember, when making payments on the bank statement, we go to the debit side. So we are going to put all of them 213,347, then we've got 260,845, then we've got 197,007. So we're going to post them, and then also we have to take note of the check numbers that we have there. We have number 63, 70, and 96, as we list them in the bank reconciliation statement. So we go there and put them on the debit side. So we are saying they are debit out, they are outstanding checks. We can just describe them as outstanding checks. And then maybe make a description of them with number. We can just say here number. The first one is number 63. And then we have put them on the debit side. Its amount is 230, 347. And then we also have number 70. And the amount is 216,845. Then the next one that we have is number 96. Here we're saying number 96. And the amount is 197 and 7. So this is what we have in terms of this text. Then obviously we can go and check what we have next there. Right. Then another item that is affecting our bank reconciliation, we are seeing it there on 2.4. A check to the value of 285,345 rands was wrongly debited to the Jacob Electronics Kitchen Appliance bank statement. So this one is on the debit side, but it's not supposed to be there. So you have to remove it. By removing it, go to the opposite side, which is credit side of the bank statement. So we can go and enter that one. This is a bank error. We have mistake that was done, so we need to correct it. So we are correcting it by crediting. So we are saying credit bank error. Or this was an entry that was erroneously or incorrectly debited. So we have 85,345. That's what we have. When we go to the next one to see what we have, to check what we have in terms of what affecting the bank reconciliation. We are here. So you see that we now have 2.6. A deposit of 61,285 was wrongly credited to Jacob's Electronic Kitchen Appliance bank statement. This was a deposit which was credited on the bank statement, not supposed to be credited. So by removing it, go to the debit side and enter 61,285. So this is what we have. We can go again and correct that one. So we are going to the debit side, and we are saying debit bank error again. This one is now a debit. We are correcting by debiting. So it's debit bank error. And the amount that we have there is 61,285. Then we can go and see if you still have another one that is affecting the bank reconciliation. We still have this one, which is 120,578. It reads a deposit of 120,578 rands, which was made on 30th July 2019, was not credited to the electronic kitchen. So we are saying these are deposits along the way, but it was on 30th July 2019, which means the date is near. So we expect that in the near time to come or near days to come, this deposit will be affected. So we are going to enter it in the bank reconciliation. But if we are told that this money maybe is lost or something happened to it, that's when we don't enter it on the bank reconciliation. But in this case, we're going to enter it there on the credit side so that it's a deposit. So we go there. We go there and enter that one. So we are saying it's a credit deposit, not yet credited. Deposit not yet credited. So we go to the credit side and put our 128,578. So this is what we have in terms of these entries. Then we go and check if you've got another one. So it seems we are here. So we can go to the next one, 2.9. 2.9, we are seeing there's nothing that is affecting the reconciliation as we are indicated. So that was the importance of indicating that this transaction is affecting the reconciliation, because you cannot waste your time going through all these entries which are not affecting. So when you are updating your cash book, just write bank reconciliation in front to show that this one is affecting the bank reconciliation. So when you get to the bank reconciliation section, it becomes easier. So here now we can go and balance our account, our reconciliation. So what are we going to do? We have a debit and credit side there. So obviously we are going to add total of the debit, total of the credit. So you see that the total of the credit is a bigger total there. If we add, we are going to get a bigger total to the on the credit side. So this is what we have. We can just leave some space here so that we put our balance there. So here our double lines. So the bigger total, you see that the bigger total is on the credit side, which is 699,620, and it comes on the both sides in between the double lines. The bigger total comes both sides in between double lines. Then the side with the smaller side, the side with the smaller total is the one which we are going to put our balance. So the debit side becomes smaller total. So we say this one, 699,720 minus the total of debit, you subtract this one, subtract this one, subtract this one, subtract this one. You get your balance here, which is 11,136, which is the same balance that we got in the cash book. This shows that you've done your reconciliation correctly. So this is now the debit debit balance as per cash book. Debit balance as per cash book. We are saying debit balance because we are referring to cash book. Because what we are doing is we are reconciling the balance of the bank statement and the balance of the cash book. So the debit balance we are referring to the cash book. So if you go to the balance that we got in the cash book, it was a debit balance. It was a debit balance. So this is what we are trying to say. So this is what we have in terms of bank reconciliation. Nothing very difficult. Hopefully this video was very helpful. Let's keep on revising so that we everything sticks in our mind. This is what we have, guys, in terms of this video, bank reconciliation. We'll meet again in the next video. Those who haven't subscribed, please subscribe and share. We are still coming to more videos that are going to assist us for exams. As for today, I'm signing out.